making sure people recognize this session is recorded. Oh, I'm Tom Bohens, by the way. I'm the host for Together in France. Thank you all for joining. Please, bring more people on board, because I think it's a very nice platform as it develops. Gives us lots of potential. But this is being recorded, and Isaac, our guests today, our host today, and us will probably republish that video. And so when you're talking on this video, your face will show up on the recording, and your voice obviously will show up on recording. So if there's some reason you don't give us permission to reuse your face and your voice, please take the precautions necessary to not speak or to close your camera. That's all. But everybody here is, by staying here, is giving us permission to reuse that video. And with that, I'm going to introduce Isaac, whose last name I cannot pronounce, but he's from Monceau CPA.
Thank you very much. I'm actually Isaac Barshishat. I'm actually sharing my screen now. Tom, can you see it? Yeah?
Yes.
Okay. I'm going to try to make it big so you guys can see bigger.
It would be good if everybody else would mute their microphone so we don't get side noise. And then if we're having a discussion later, you can unmute it. Well, I can unmute everyone. I'm going to do that now. And Isaac has to re-unmute himself. Sorry, Isaac. Yeah.
All right.
There, thank you.
Tom, I'm making it bigger. Just make sure everybody can see it. You can see it?
Yes.
Okay, perfect. Well, good afternoon, good morning, wherever you are. It is a pleasure for me to walk you through for the next hour with the complexity or the fun of taxes in France. Obviously, we won't be able to cover everything, but a good portion will be there. Even in the slides, I try to be more detailed so you have more information. Today, let's see if this works. Yeah, I don't know if it's going to work like this. Maybe, yeah, well, it seems to be a little bit slow. So as Tom mentioned, we also have us as a disclaimer, but that is easy to know about. Let's see if the next page works. Okay. So what do we have in the agenda today? We have fiscal residency, double tax treaty, personal income tax, wealth, property, and occupancy tax. And then later on, we'll have Q&A questions for you guys. I'm sure you have lots of questions. So first of all, I need to present myself. I am the founder and partner at the Monceau CPA firm. Specialize in French, US, and Canada because I'm licensed in all three countries. But in general, we are more assisting the international community. I've had the pleasure to work for the big four companies for many years, and then also work for GE, General Electric, in Paris and in New York. Graduated in the US, but I'm born and raised in France, and a couple of years of experience. Happened to be on the side a certified foreign translator, a US notary public, and a deputy mayor of one of the city right outside Paris called Saint-Brice-sous-Forêt. I will now proceed with the next slide, which is one of the most important slides about fiscal residency. There's a lot of myth and legend around what makes someone a fiscal resident. So I'm sure you all heard stories on Facebook, on Twitter, online, or whatever it is, but now is the time to finally understand what is the Article 4B of the tax law says. You can be a fiscal resident if you fall into one of those 6 categories. Yes, it is true that if you spend more than 183 days physically here, then you will be probably a tax resident. However, it is important to, maybe I'll do it this way. Sorry, I'm just going to try to use the PDF because it looks like to be a little bit smaller. Yeah, maybe this one is better. However, it doesn't mean that if you are not falling into the other categories that you are yes or no fiscal resident. So it's important that if you travel, for example, then we'll look at the majority of the days that's spent in France. For example, if you travel between the US and France, if you spend the majority disregard of the other elements, then you will be a fiscal French resident. Obviously, as an introduction, everybody knows that as a US passport holder, a US citizen, you will always have for the rest of your life the obligation to submit a US tax return, federal and not state and local, unless you have income coming in from those states and cities. But if you live in France, you only have to submit a federal tax return, which we can talk on a different topic. Professional activity, if you work primarily here, again, that means that your main place of activity is here. Your economic interest, your business holder, and your HQ is located here. Majority of your investments are located in France. Your primary residence, so this is important, the last two on primary residence and family. So if you decided, for example, our friends from England with the Brexit decided to set foot in France on December 31st, as they say in France, then on that day on, they became a French fiscal resident. Now, it is important to understand that the year you're becoming a French fiscal resident is a transition year. So the official date is when you're becoming a French fiscal resident. So depending on those criteria that were listed there, you can end up being a French fiscal resident on December 31st. But anything prior to that, will not be included into your French fiscal tax return because it was before you decided to come to France. So those are the six criteria and nothing else. Then how does the tax liability work? Again, general concepts that you will see later on in details. You have what we call for resident and non-resident. We talked about residency before, so we know now what is a resident and what is a non-resident. To start off as easy, a non-resident, you basically pay taxes only on whatever you own in France. So if you earn money in France, if you own a house, if you use a house here, or if you have assets that are falling into the category of wealth tax, then you will be subject to French taxes. Usually it's about 20 to 30% because those are the flat fees in France that we have. For the resident, a lot of people maybe get confused. We have the direct and indirect tax. The first three ones are what we call the direct. So it's coming out from your pockets through income that you're earning, whether in France, you and your family, or through your worldwide income. I want to insist on point 2 here on income tax on worldwide income. Although you're living in France and may very well be retired or working remotely for a US company, all of your income must be reported into the French tax return. It's an obligation. Now, it does not mean that you will be taxed. It means that you need to disclose, and that's what it's called reporting. There's a special form called 2047 form into the French tax return that you will be able to fill in all the categories there, interest, dividends, in rental property, whatever you have abroad. But it is important that at the end of the year, you disclose everything, along with point 3, where a lot of people are getting caught by the French IRS. It's called the DGFiP, Direction Générale des Finances Publiques. Basically, you must disclose all of the accounts that you have abroad, non-French bank accounts. And again, even if your mother, your grandmother, your cousin, whoever maybe opened a bank account 20, 30, 50 years ago that you don't know of, it's all about disclosing. They don't know how much you earn, but they want to know, what do you have? If you own a 529, a IRA, 401k, credit card, more than $10,000 spending a year, must be disclosed. Very important. I've had, unfortunately, people getting fined and penalty for that, 1,500 euros per account non-disclosed. So for accounts that you have pennies there that have been sleeping for years, it will be just a waste of money not to disclose it. Occupancy property tax, we'll see later. One is for taxe foncière. I'm sure everybody heard when you own a house. Taxe d'habitation, which is supposed to be phased out if it is your primary home. We'll see that later. And wealth tax, everybody talks about it. It used to be called ISF, ESF, and now it's called IFI, which is kind of a super tax you have to pay if you own more than a certain threshold, mainly in assets. And we'll look at it later as well. Now, it is also important that majority of us here have multiple passports and have income from different countries, perhaps. Then it is important that France is among the country, probably the country with the most treaties, tax treaties worldwide. We actually have about 125 countries with whom do we have tax treaty. Okay, so the idea, again, without going into details, is obviously to look at a tax treaty that nobody can understand. The one with the US, for example, in France, seems to be straightforward, but there's always loopholes. There's always the French administration that have problems with interpreting sometimes the articles, and we have to fight with them and to show them basically that such and that foreign income subject to US tax shouldn't be taxed in France as well. But the idea is, if you earn money in France, then you're subject to French tax. If you earn money in the US, then you're subject to US tax. Again, we talked about the reporting aspect earlier, not to confuse yourself that even if in France, and again, I'm not focusing on the US side today, but on the French side, even if you earn money, 100% of your income from abroad, let's say pension, then you must disclose that into your French tax return. Very important to understand this concept. Assets, 99% of the time, if you have properties based in the US, for example, then the tax treaties, in the majority of the case, will honor the fact that the taxation of that asset goes wherever the asset is located. So if the asset is located in the US, the US will get the tax on that, okay? We're not talking about the activity that you may have as a rental and so on. That's another story, but at least you understand. It does not cover the tax treaty wealth tax, which we briefly talked before and we will talk later on extensively. Just for you to know that if you are French resident, you have the first 5 years where we don't include your non-French assets into this complex equation of what is wealth tax. Inheritance as well, complex tax rules that are not covered by the double tax treaty. Personal income tax, we call that IR, impôt sur les revenus, or IRPP, which is impôt sur les revenus pour les particuliers. In the US, we'll use, for example, the word 1040. In France, the equivalent of the 1040, for your knowledge, is the 2042. Okay, so how does that work? Well, we have three buckets here. The income first, whether you're resident or non-resident, then everything that is taxable from France. And you will see in the next slide, we have 7 different categories in which all of those income can fall into. The rate, the tax rate depends on married, not married, kids, not kids, PAX, no PAX. And then you have progressive, again, rates that we will see later on from 0 to 45%. The tax system in France finally aligned itself with whatever we have in the US or in the UK, with what we call the PAYE in the UK, for example, the withholding tax coming out of your paycheck. It's called the PAS, prélèvement à la source in France. Majority of the case, the declaration must be done online, and it's an obligation. If you go through an accountant like us, we will be doing it for you online, unless you are what we call primo-déclarant, which is the first year you arrived in France and you don't have yet a numéro fiscal, which is the equivalent of the social security number, but for tax purposes only in France. And in that case, you're allowed to do paper file. Very important. The last point, if you have nothing in France, or if you believe you have earned no income, zero income in France, you must file a null income. I know, again, in the US, one of my specialty, we all have threshold. If you're an independent, $400. If you're single, $12,000. Before that, you're not required to file anything. In France, French bureaucracy and its beauty, you have to file a French tax return null. So I was referring earlier to the 7 categories. You can see them here. And again, my intent is to not make you drown with a lot of information, but to give you the idea of the concepts. So you should fall into one of those categories: salary, BIC, or BNC. So if you have an activity, for example, the micro enterprise, commercial or non-commercial, agricultural, rental income, investments, and capital gains. All of those will also be added the layer of non-French income, which we talked about. But again, not to be too complex, when we have non-French income, we add it here, and then on the below line on the French tax return, it's being neutralized with a credit, a tax credit. So basically the French IRS, again, the DGFIP, is fully aware of what you earn outside of France, and then basically they offer you a credit to neutralize the tax impact. I've had people making a lot of money abroad, but because they are taxed already abroad, they don't necessarily have an additional tax in France because of those tax treaty we have between the two countries. All right, so let's get a little bit deeper into how things really work. So when we calculate, or when we want to compute the income tax, which we talked about earlier, hier, impôt sur les revenus, we talked about this notion of foyer fiscal, right? Basically, dependency, how many dependents do you have? And you can see here, it's not always one part, one number, 1 point per person. You can see it's 1, 2, and then afterwards it could be 0.5. And then after making a lot of children, and that's why it's good to have lots of children in France, you can get more dependency points. All of that is critical because all of that will basically lower your tax liability. Again, as I said earlier, there's a progressive element of the tax in France. You can see on the left the 2021 tax bracket rates payable in 2022. We'll talk about the calendar in a few minutes, but everybody knows in France, the tax year is a calendar year from January 1st to December 31st. And usually around May or June this year, due to COVID, the submission of the tax return is due. So the rates are already published, and you can see here the tax brackets that one can fall into which category. And you can see also the way it's calculated. So there's a notion of the quotient familial, which we talked earlier with number of dependents that you have in your family. And you can see here the very astronomic equation, how do things work out. And then at the same time, you can also see that if you make more than a certain threshold, which is 250,000 euros in France, then there may be what we call an exceptional contribution for high revenues. Moving on to the next one, very important. So as anywhere in the world, you have possibilities to reduce your tax liabilities. On one hand, you have the allowances, the tax allowances are just here to reduce the tax liability. But if you have no tax liabilities, then you won't get a refund. That money will be parked aside to be carried forward. So those are the elements you can see on the left. On the right, you can see the tax credit, which is basically things that even if you don't owe money to the government, they will refund it to you. So let's go a little bit about example, right? So everybody see that we all have a standard deduction, child education, adult, so child support, if you're separated and so on. You also have alimony. Then we have long-term nursing care for elderly people or sick people that you are dependent, they're dependent on you. Charitable donation, everybody knows that in France is 2/3 deductible, up to 20% of your income, okay? Then you have certain investments that could be also deductible. And if you have a son or a daughter that is a student and a practice, income is basically you can get a deduction for that as well, an allowance. On the right side, this is important. You have the energy or the home improvements. So a lot of people are telling me, Isaac, I'm acquiring this house, I'm buying this house, and there's a lot of renovation to be done. And the guy told me that I will be able to offset part of the bill through my taxes. So you have to be first very cautious because the rules are evolving. It used to be a lot more, now it's about 10, 20, or 30%, depending on the case. And more importantly, the professional to deal with must have the label license called RGE. If it doesn't have that, then the bill that it will issue you will not be deducted from your taxes, okay? Childcare outside of the home, domestic help. So if you retain the services of a nunu, right, a nanny, then you can pay the nanny and get a special tax credit. If you have a gardener in your house, up to a certain amount, 300 euros or 500 euros, you can leverage 50% of that amount. If you work with us, for example, we are accredited in France, 50% of the fees paid to us will be refunded to you through tax credit. By the way, all of those three that you can see here, they're combined into what we call in France, service à la personne, personal services. All of those are limited, capped to 12,000 euros a year if you are single, 15,000 euros if you're married, and 18,000 euros if you are married with children. So 18,000 euros to spend on the gardener, to spend on your nunu, to spend on nunu because it's a nanny in English, to spend on your tax professional, and sometimes even the maid. You have company that you pay a company and that are what we call service à la personne eligible, then you can get 50% tax deductible from the 18, 15, or 12,000 euros limit that we know of. Declaration of d'impôt, all right? So how does the process indeed actually work? First, you gather the paperwork related to income and expenses. Again, I'm not inventing anything here because most of you are already coming from countries that are similar in the process what we do in France. Then if you have already a tax portal access, that means you already have a tax ID number, you can fill out the forms online, you can do it yourself, you can be guided by the Centre des Impôts, which is your local tax center. And then ultimately, you can also decide to work with a tax preparer, or for you to get advice or to have them do everything, okay? Either or, you can decide, but those basically the process. As I'll explain to you now, before we go back to the process in details, a couple important questions, a couple important points that you must have in mind. How do you gain access to the impôt.gov website? It's important to gain access. Well, you first need to have a numéro fiscal, right? We talked about the numéro fiscal, it's the tax ID number, okay? To get it, you have a couple possibilities. Again, you have to prerequisite is for you to be in France. I think earlier someone in this chat asked who is already a French tax resident. So if you are a French tax resident, this applies to you. If you're not yet a French tax resident, this will only apply when you set foot in France and you have a valid visa and so on. The first way is you could do it online. You could provide all of the relevant documents. They usually ask for your bank details, your passports, your visa, and you will get usually pretty rapidly. Now, this is, again, in a pre-COVID world. With the COVID, all the admin services are now swamped, and I'm not sure they'll be able to answer rapidly, but theoretically it works. It also works when you do it not next to the tax deadlines. So if you are asking it in April or May, when the tax deadlines are around the corner, most likely they will not respond to you, the services, they will be not available. So you can then move on to option B, which is the paper request. There's a form called 2043 that you can go online. I'm providing here the link. and just fill it out, the same paperwork are asked, the same in the category A, and then you can send it to them via email or letter, and then they will respond to you, okay? It's the only way to go ahead with getting a numéro fiscal. The last way is obviously, once we prepare, for example, your tax return, we will then use option B and include it into the tax return we submit to the authorities. So it's pretty much A or B. If you physically want to go there, you can go to local offices, walk in. With COVID, they have not been accepted a lot of people. Now it's kind of getting a little bit better. So you can get your address of the office you belong to on your French tax return. Or if you see here, there's a website where you put your physical address, and in the physical address, they'll tell you which tax center you belong to, and you can go there. Out of this page, the most important thing that you need to walk out with is the access to the secured message system, which is the tax portal. You can see here. The tax portal is critical because nowadays everything can be done remote and everything can be done through the tax portal. For example, we talked earlier about the PAS, the prélèvement à la source, which is how much withholding tax they're taking out of your paycheck or of your rental income. If you are getting married, have a child, or any news in your life, you can immediately report that to them and they will update basically your rate. And that is important, so at least you are paying the right taxes on a monthly basis. Now, going back to the process, now that we know all of that we know how to prepare ourselves, just for you to know that usually in April, that's where the tax season is officially open. So we accountants usually, with the good clients with whom do we have all the relevant documents, we try to work with them January through April. So as soon as the declaration portal is open, we can submit their tax return. In May or June, depending on the year, you have basically 4 deadlines to submit your returns. And again, priority to paper, to e-file or electronic filing, online or so on, an exception to be paper file. 4 dates, depending on the departments, the zone you live in. And again, those were prior years deadlines, but usually around the same dates. And then you have the non-resident deadline as well, which we talked if you're a resident and non-resident at the beginning of this presentation. What's then going to happen is different than maybe in the US, for example. They'll review from May, June through the summer, they'll review the tax authorities, your tax return, the declaration that one or you have prepared, and then they will basically issue what they call an avis d'imposition. It's the tax bill. The majority of the case, the tax bill equals the declaration that was submitted, and usually you know already when you do a tax declaration how much you're going to be ending up paying. If you do it yourself, the tax, if you do it yourself online and you have foreign income, the system will not be able to calculate how much you owe or don't owe. If you use a professional, the professional will always tell you how much approximately you should be paying or you should be getting. And the key question is ensuring that once you receive the tax bill, it is exactly what you had expected a couple months before. Unfortunately, I have to admit 10 to 20% of our clients, not me or other peers in the field, when the tax authorities deal with international folks and international transactions, the tax authorities sometimes mess it up because they are not used yet to deal with foreign income source. They don't master the tax treaties, and it is our duty to go back to them and challenge them and making them change their mind. So far, I've had 15 clients out of 300 in this situation, and 100% of them got basically the tax bill changed and modified to match what we had initially stated. So that means errors can happen, but you have to be patient as anything happens in France, and you need to know where you're heading and talking to. And then usually in September, and I mean usually because this year, for example, this is definitely not the case. Usually in September, you get your payment to be paid. I mean, you have to pay or you get your refund. And then your pass rate, which is the withholding tax rate, is then updated depending of the declaration you've done the prior year. Okay, so that's basically, I'm saying theoretically because we are now October 14th, and some of my clients, myself, for example, have not been receiving our tax bill. And I've talked to the tax authorities yesterday. They're now talking to a Christmas date to get our tax bill. I say right on time for Christmas gifts. So you have to be patient because not everything is black and white in France. Moving on to wealth tax. It's important because if you come, for example, to retire in France, you've already built up your wealth outside of France. What are the consequences and what the heck is wealth tax? Well, since 2018, the name changed, but it's pretty much the same thing. If you have eligible assets that are combined net more than 1.3 millions, then you have to pay special taxes, we'll see. When we mean net assets, is obviously asset that you own, mortgage free, and we're not talking about your primary resident. Primary residence is excluded from here unless there's some type of scheme, and if you're an SCI and so on, you get special allowances. So if you basically fall into that category and own more than 1.3 million euros of assets, then it's retroactive since 800,000 euros, the computation of the tax. It is important to understand that who's determining your value of your net assets? It's you. They are not going to ask you every year to go to an appraiser and ask exactly how much are your assets valued for. But again, you have to be fair in your approach. One of the approach is to consult with local realtors so that they could write you letters to provide you an assessment. You can do it every other year. You can also look online how much is the square meters in your area. And based on that, you can apply a ratio. There are multiple ways to be fair value assessment. As I said earlier, the first 5 years, all of the foreign assets are excluded from this computation. So that gives you enough time to determine if you basically want to perhaps sell some of your assets located abroad so that basically you are not eligible for the wealth tax, the IFI in France. IFI calculation, so as you can see here, although the 1.3 million is the triggering point, the tax starts from the 800,000, it's retroactive. And you can see here, it's 0.5% all the way to 1.5%. And I've given here an example on the right so that you can see here of how does it work. We talked about the primary residence to be special allowance of 30%. The debts are obviously deductible. I talked earlier about the net amount, so obviously the debt are excluded. And you can see here how much are we talking here in terms of this example that you have here. Okay, so that's for the wealth tax. Moving on, the next few minutes I know you may have a lot of Q&A. I think Tom is monitoring that for later. I haven't been able yet to answer them, but I'll answer them at the end if you're okay with that. Real estate taxes. Again, it was important for me to talk about the direct and the indirect taxes. So far, we've talked about the direct taxes. Now let's move on to the indirect taxes. What do we have? We have the property tax, taxe foncière, Everybody knows that if you own a house, whether you live or you don't live here, you own it, you have to pay property tax. This is called taxe foncière. So what is it? A lot of information. We know it's an annual bill for anything that you own in France. It could be a land, it could be parking, it could be building. Where is it paid? Well, you get the bill every year, usually in October, November, right? The time usually it's now. You get the bill and it's paid to multiple parties. Among them is the town you live in and the region you live in and so on. This is helpful for them to get their budget, and that's how they get their budget. It's due, as I said, in after the summer. So it's usually bill comes in September, and at least you know it's going to be debited sometime in October or November. Calculation is there. Again, complex. If you want to get into it, you can look into it and we can talk about it. But basically what you need to know is there's very few areas or few occasions where you can be exonerated from paying the taxe foncière. The next one is occupancy tax. A lot of people talk about it, taxe d'habitation. It was as part of the program of Macron. He said he will be canceling the taxe d'habitation. There have been some multiple phases. Indeed, low income taxpayers have basically been excluded from this tax. And the plan is to have everybody in France not to pay this tax anymore in 2023, so long as you are not, it's not a secondary house. So taxe d'habitation can be exempted, so-called if Macron might be reelected. We don't know if 2022 he will be reelected. Maybe this law will change for high net worth individuals, but at least for now, it's been phased out for many people. And if this is your secondary home or if you rent it out, you're not included into this special exoneration rule. But in general, how does the taxe d'habitation work? You could see here that it's also a way for them to get more money. Again, local people, students, allowances and so on that the government pays them, gets the money from there. It's usually the trigger point is in January 1st, where you leave. And it's also paid in October, so you get it after the summer. It's also paid in October or November. And you can see also here the tricky way that it is calculated. As I said, the phase out system, a lot of people have already been excluded from paying it. Some people are still paying it or portion of it, and it's due officially to come out in 2023. Again, if you're buying a house in middle of the year, you may well be having to pay taxe foncière, taxe d'habitation pro rata to your old, the owner, the pre-existing owner. So at least you know how does the system work when you live or own a house in France. Then before we open up the Q&A, I wanted to introduce myself. I think I have another 3 minutes before I open up the Q&A. So as I said, I'm the partner of Monceau CPA. We assist clients, mainly English speaking, but not only, in France and above. We have a practice in France and in the US and now in Canada as well. So we can do both of the returns under the same roof. So a lot of people appreciate the fact that we can do US and French returns, for example. We also, obviously, we're talking here about individual taxation, but we also do corporate taxations. So if you decide to open up an SIS or an SARL or any business in France, we are here to help. I just want to open up an idea for the future before we do open up Q&A. A lot of people, especially Americans, I don't know, the way things are in the US or not, have decided to move to France or perhaps work remotely thanks to COVID. It is critical, and you can go to my website. I have done a special webinar to know that if you work physically in France, even though for a company based in the US, you will have to pay taxes in France. So there are ways to come around it. There are ways to make your business legit. But a lot of people say, you know, I've been here as a tourist. I have been here as a remote employee. I have been here not earning any money in France, my retirement in the US. It's critical for everybody to know that French tax system works on territoriality. So if you are living in France or earning physically the money while being in France, this money is subject to French tax. And with that, I'm just going to terminate by saying that if you want a copy, and Tom might help with that later on as well, a copy of this document, you can send us an email at info@montsocp.com or through Tom, and we'll be happy to share with you the slides or the recording so you can definitely review that when you have spare time. Tom, is that okay if I go ahead with the Q&A that we're already addressed through the chat?
Yes, I just want to remind the latecomers that if you ask a question in the Q&A, your face will be included in the video and your voice. So if you don't want that to happen, don't ask the question or hide your camera. So just for privacy disclosure reasons. So
we have a couple minutes for the Q&A. I'm sharing here some of the Q&A that we received. So could I recommend French notaire and so on? I have in my network a lot of professionals, a lot of people talking in English, as you can imagine. Yes, email me, and I've provided, I think, my email address here. So I'll put that aside again. So you can see here my email address, email me, and I'll put you in touch. Same with the lawyer, same with the notaire, same with if you want a retirement plan in France, and same also if you have financial assets in the US that you don't know how to handle while you live in France. I'm sure a lot of people that I want to get you stressed, I've heard about the PFIC, passive foreign income sources, that if you own assets in mutual funds in France as an American, you're not very much allowed to do so. But again, we have, bottom lines, a network of professionals that we could share with you. And I can see here others have also recommended people. I didn't find a way to contact the employer without already having social security number. Well, multiple ways. If for social security number in France are nothing connected to the tax system. So to get us a tax ID number, all you need is a valid visa, passport, a European passport, justificatif de domicile, which is proof of domicile, and a RIB, bank details, along with the Form 2043 that you can do online or paper, and they will issue you a numéro fiscal. Can we have a numéro fiscal without being a tax resident yet? Yes and no. Theoretically, no, and I think I've answered this question earlier. But if you own a house in France, you will be assigned a tax resident tax ID number on your tax bill, which most of the time is the same for your future work life in France. Or if you have non-resident status with French income, then you will have a tax ID number. Is 401k included? I guess you are talking to the foreign bank accounts disclosure. Yes. I don't know if that was the question, but yes. I have a question also about inaccessible pension fund contribution being included in my wealth tax calculation. Okay, so we'll probably have to talk about that, Kiliana, separately to see exactly what you mean by inaccessible pension fund contribution in France or abroad. And we can certainly talk about it on a separate note. If you invest heavily into REITs, I don't know the answer. Well, I don't know what is the next question. So again, maybe John, either you can rephrase your questions or can email me on this one. Can the property tax assessment be used instead of market value? So the property tax assessment, yes. Again, put yourself in the shoes of the French tax authorities. If you are way below the threshold of 1.3 million euros, nobody would care what the methods you use. If you are close to the 1.3 million, obviously in case of an audit, and again, they are not challenging you as part of the declaration, they're challenging you in case of an audit, but you should always prepare yourself for an audit. then you have to be at arm's length, meaning you have to be fair. And majority of the time, it's the market value, right? Because it's how much can you sell tomorrow the property for and get the money for. So in the property tax assessment, there may be different than the market value. Residency question. If primary residence in the USA, second in France, husband in job 6 months a year in the USA, wife 6 and 8 months in France, where will residency be? Well, first of all, I think we've covered a lot of it earlier today. I'm hoping that this clarified your question. Second, the tax treaty between France and the US, like majority of the French tax treaties, are covering impasse. What we call impasse on French is dead end, where we believe that we are French resident and US resident at the same time. So we have to look there what the tax convention, the tax treaty says. And third, when you really don't know, then we can always decide what we call a rescrit, which is confirmation from the tax authorities about your specific situation in order to know exactly where you can stand. But it looks like to me that your family is in France. You may have a home, I guess, your family is in the US, Francine. You have family job in the US, and you are commuting to France for pleasure or for exceptional temporary work. So probably you will not be a French fiscal resident. We could certainly look at it at length. If you live in your French will funds to charity, is that also taxed as inheritance tax? No. Okay, charity are excluded from the inheritance tax that your heirs will have to pick it up. And if you work remotely in France for a foreign company, that company needs to be from a Circular branch of France. Martin, great questions. I invite you to go onto my website. I have done a webinar in March specifically on that topic, but short answers to a short question. No, you don't necessarily have to have a branch in France. There are alternative solutions. Will we be able to receive the return presentation? Please, yes. If you send me an email, yes, with authorization from Tom, I will be able to share that with you later on. Are the French social charges part of the income tax? No. Very important question, Alice and Andrew. When we talked so far, we talked general concepts, but it is true that in the tax system, you have the pure tax and you have what we call CSG, CRDS, which are commonly known as social charges. Now, example, why sometimes it's important to use, and again, I'm not doing publicity for me, even though I'm trying to, but you get my point that it's important to use someone who's knowledgeable in both countries. For example, if you have certain foreign income that you picking up while living in France, I said earlier, the majority of the case, the double tax treaty will protect you in order not to pay double taxation. However, sometimes this does not apply to social charges. Social charges are 17.2% in France. So what may have happened in France is you may end up paying social charges in France on a foreign earned income for which you already pay taxes in the US for, and then you're basically being double taxed. So what happened for many, many years, there was a fight between the IRS and the DGFIP about saying that this type of tax, the CSG, CRD, social charges, were not truly a tax. It was something to pay to contribute to the social system, which was true 40 years ago, but since 40 years, it has not been the case. They kept the name in France, social charges, to make you believe that if you pay social charges, it will give you rights, but it doesn't give you rights to no social elements in France. So it's a hidden tax. So in 2019, France and the USA have come to an agreement saying that you pay on one end the 17.2% tax, social charge tax on certain elements, for example, rental income from the US, sometimes can be, depending on what criteria, taxed in France, social charges only. But then you get a tax credit onto what we call foreign tax credit onto your US return, right? So then it's basically a wash. It's neutralized between what you pay in France and what you're getting at in the US. Confused about business income? Don't be confused. I have a US company. Clients will sign up for services on website. What income is French? Well, it all depends where is the business located and where are you located. If the main center, economic center, the decision are being made from here, then clients could be anywhere. But at the end of the day, right, you paying taxes in France because the source, the territoriality aspect is France. But again, Martin, we can talk about it if you want a side note. For the last 5 minutes, I'm going to try to aim to respond to all of the queries here. If working remotely for US company from France, can we use the foreign earned income exclusion for the US? You're referring to the FEIE. Will we pay income tax in France or in the US? Again, I'll answer backwards. Wherever the money comes from, you have to pay taxes. So if money comes from France, you'll have to pay French taxes. If money comes from the US, you'll have to pay taxes in the US. But if you work remotely, then theoretically you should earn money in France, right? Even if your company is located in the US, the fact that you live in France, you need to watch my webinar or talk with me about it. Your company in the US must be reporting you, must be paying you through a French channel, through a French vehicle. Why? Because the tax authorities say, hey, and by the way, the tax treaty between both countries does not cover that because you either are living in France or living there. So yes, COVID has created a lot of options to work remotely, but at the end of the day, your main place of residence is here and your business should be here and you can work in the US, no problem remotely, but your taxes should be here. And again, there are solutions which we can talk later on. Are US investments, income and capital gains subject to social charges? Yes and no. Majority of the case, no, because you're subject to taxes already there, but sometimes yes, and there are exclusions that we could talk about depending on your situation. If you arrived in France on September 20th on a student visa and was a full-time student, had no foreign income in France, should you have submitted tax return by May 2021? If you didn't, how can you fix that now? Yes, if you are a resident of France because you're under a student visa, which is a permanent visa, right? So long as you're a student, and you may have earned money from apprentice or from an internship or not, and you may have a social security number, you may exist, you may want to work as a waiter or anything, then you should be in the system and file a French return. Now, majority of the case, you don't owe money. So even if you do it now, and by the way, you have until December 2021, exactly 15 December of 2021 to fix, if you haven't or if you have not done correctly, your 2020 tax return. I apologize if I missed this, but our resident tax on capital gains, interest, and dividends, as I said earlier, we'll look at the tax treaty, depending on which country you're from. Again, the spirit is the majority of the time, if you pay taxes there, you don't pay taxes here to a certain level, because the tricky part is you don't get a euro for a euro. You get sometimes a tax credit that kind of wash off either everything or portion. So again, this is a question that needs to be discussed, Alicia, case by case. Are retirement investments included in calculation of wealth tax? I don't know what you mean by retirement investments, but the wealth tax is about assets, physical assets, majority of the time. So if you have property that you generate retirement from, but you still own the property, then yes, the proceeds will be, the value will be included there. I don't know if I'll be able, Tom, in the last 3 minutes to answer everything, but after you meet the residency requirement, your social security income and IRA distribution, even with the toleration agreement. So if you meet the residency requirement, if you earn money in the US pensions, you will not be paying taxes in France, but you will report it in France, as we talked earlier, for any foreign income source. I understand that the wealth tax only includes real estate since 2018. No, it used to be inclusive of real estate taxes and other things, and now they just limited it to real estate. If I invest a significant portion of my IRA in REITs, will that amount to real estate or not? No, because your primary investments is basically your IRA. Okay. Regarding remote work, if I'm visiting my home there for 2 months and work some pretensions while there, should I prepare tax for that? Well, if you're a French fiscal resident and you go visit somebody in the US or your family and you work from there, if you're an employee of a French company or work for your French company, everything will remain as is, even though you are exceptionally visiting the US. However, if you have a US company at the same time, some people have an LLC, then whatever work is generated while being under US soil should be captured through that LLC in the US and not included in French soil, because you are working for two companies at the same time, one in France, the micro enterprise, for example, or the SASU, that is captured through the territoriality system we talked about, and then one in the US, you can use the LLC. Are all tax deduction apply to income from all assets or only income from a job? Not sure I understand French in the question, but the tax deduction we gave earlier a slide just for that to capture which are the ones in deducted or not. We talked about capital gain tax as ordinary income. Yes, majority of the time we have what we call the flat tax in France, which is 30% if you have capital gains from France. For income taxes and social charges, what happens if capital gains are offset with losses brought forward from previous years? We usually take the net position to generate the tax there. Form 2043 is for FN, not sure, but needs to social security, does the come from l'assurance maladie. You don't need a social security number for the 2043. Just for you to know, I think I talked about it earlier. It's two separate things. Does France have a program similar to IRA or SIRA? Yes, Madame Kat. It's called the PER or the PERP, or, you know, Plan d'épargne retraite. It's similar, but it's same spirit. Okay. If I cannot access funds from a pension fund, okay, does the current value still count against assets? No, if it's blocked and not distributable, it's not yet there. So no declarations to be doing in that. In regards to inheritance tax, if I decide to take French nationality, will I have to pay inheritance tax to the French government? I would be inheriting from Mexico. I'm concerned I'll have to pay inheritance tax in the US and France. I don't know, will I still have to pay inheritance tax? Look, French inheritance tax are among the highest tax rate and among the most complicated questions. But in a nutshell, just to explain to you, Rita, and maybe we can talk about it on a separate note, you should know that if you are French resident, tax resident, France will be the first one to capture as many tax as possible. So we have the couple of years excluded there, and we can talk about it as we talk about the wealth tax. There's also exclusion of how many years you've lived in France and so on. But majority of the case, the French tax will apply first.
Merci. Yeah, so Isaac, I have a hard stop at 9.
Good.
So we have to leave some of these questions for, you can probably post them in the Together in France site, and Isaac might be able to answer them there. Isaac, if you send me a copy of the PowerPoint, I'll also include that in the site
okay.
as well. And thank you very much. Very thorough and informative. I'm sure everyone's going to want to watch the recast to make sure that they're following exactly, because there was a lot of information there. Very good. Thank you so much.
Thank you, everyone. Have a good day.